The first issue that can really cause a stock market rally to slow down is if more people start to get worried about the strength of the dollar. Everybody's worried about inflation. That's why you're seeing a lot of people now wanting to move their cash to other assets, things like stocks, real estate, Bitcoin, gold. So people have been moving their money into stocks because they're worried about inflation. But if people really start to get worried about the dollar and the long-term health of the dollar, then you might see people move their money out of stocks. Here's what that means. In 2020 and into 2021, you saw a lot of people spending money that they didn't work to earn. They got this money through the help of the government. Now, the government didn't have money just laying around to pay for everything, right? The government has national debt because they spend more money than they have. So the way that they fund these stimulus programs, and it's not just people. You see the same thing happening with corporations, but it's easier to understand with people. So the government now has to print this money out of thin air, and then they give this money to people. Now, when the government does that, they create new dollars out of thin air, and this creates more inflation because now the value of each dollar goes down. But now let's take a step back and understand what this means. People are earning dollars that they didn't have to work to earn, and these dollars are created out of thin air. Then people take these dollars and they go shopping. They go and spend this money. And this money goes to a store who's creating their products overseas. So this money is now being used to buy products made overseas. And now you have these countries overseas that are creating products. And the only reason they're willing to create these products is because they're willing to accept our dollars that are created out of thin air to create these products. So these companies overseas are now taking our dollars created out of thin air. They're creating products and sending us the products. If these companies in countries overseas start to wonder, wait, what is the real value of this dollar? Does this dollar really have the value that we think it does? And then they start to say, you know what, either we're gonna want more dollars or we don't want this dollar, then we're gonna have real problems because then people are gonna say, wait, I want to be able to buy these products, but you're not willing to sell me these products at this price. I have to pay you 2 times more. Anytime you start to see these big inflationary worries, what you see happen is you see investors sell their stocks and then they move their money to new assets, things like gold, things like land, and nowadays things like cryptocurrency. Or you might also see the investors sell their stocks to buy companies of emerging markets, so countries that are up and coming, that where they're not just reliant on the dollar. This is a pretty unique threat because this is not something that anyone had to ever think about before, but now investors are really starting to think about this because they're worried about what could potentially happen with the dollar if we continue to spend more money than we bring in. So if the government keeps spending way more money and they don't have the tax revenue to pay for this and they just keep printing money to pay for all of their expenses, if countries around the world and people start to question the real value of the dollar, well then that could put a lot of downward pressure on the dollar, which could ultimately hurt stocks. Now you might be thinking, wait Jaspreet, if the dollar becomes weaker because we see more inflation, wouldn't that mean that stock prices would go up? Well, it depends. If a company is dependent upon the dollar because they transact with the dollar and now this dollar becomes less valuable, now this company would in essence become less valuable because everything they own is measured in dollars. It kind of like has a tipping point because in general, inflation can be good for stocks because now when the prices of things go up because the dollar gets valued, you own shares of the companies that are now selling the products at higher prices. And it's not necessarily a higher price, it's just that the value of the dollar, the currency is lower, and so the company has to sell it for a higher price. And if you own the company, then you're benefiting because now the value of your stock goes up. But if you start to see too much inflation because of worries about the actual value or strength of the dollar, then that can be too much, which can cause it to come down. And this brings me to the second thing that can slow down the stock market, which is an economic slowdown. This is probably the most obvious thing because the stock market is supposed to work kind of in correlation with the economy, but it doesn't always work that way. Because if the economy slows, then you might see the stock market continue to go up if people believe that the economy will start to grow in the future. But if the economy is growing slower than expected, this can hurt expectations, which can cause people to now pull their money out of the stock market because they're worried about the future strength of the economy. Our economy is having some serious issues. I mean, companies are struggling sourcing products because of supply chain issues. Companies are having a tough time finding labor because of labor shortages. And companies are having a tough time figuring out what to sell their products at because either they can't source their products or because of inflationary pressures, which are forcing them to sell products at higher prices. And if people cannot afford the products, then they won't be able to sell the products, which ultimately hurts the company. But we also have a less talked about issue, which is really starting to become a problem, which is the trade deficit. This means that the United States is now exporting way less than what they are importing, and we are breaking new record highs with our trade deficit. This trade deficit started to become an issue towards the summer of 2021 because we started breaking new record highs for trade deficits, and we were doing this month after month. And then in August of 2021, it really started to get bad when our trade deficit was getting way worse than expected. And then come September of 2021, our trade deficit got even more worse than expected. What this means is we are relying on other countries more than we're relying on our own to create products, because we are importing way more products than we're exporting out of the United States. So it's a trade deficit. Now, some people might say at this point that, oh, this is because of the supply chain bottlenecks that we have going on. We're not able to get products in or out of the United States. But if that was the case, our trade deficit would say that we are exporting more than we're importing because our ports are so clogged that we can't bring things into the United States. But that's not what it says. It's saying that we are importing way more than what we are exporting, which is why we're seeing this massive trade deficit at levels that we have never seen before. So why does this matter, right? Because I mean, if we can produce products cheaper in China and Vietnam and India and other places overseas, shouldn't we just pay them less money over there, that way we can get the products cheap and then bring them into the United States? And in theory, yeah, you're right, because if we can make the products cheaper over there, why would you want to overpay to get it made in the United States? Sure, we can create jobs in the United States, but if you're looking at this from an economic level, if you can make everything cheaper over there and you can buy things overseas, then how is that bad for us? Well, the problem that this is kind of indicating is that we are not really producing products. And because we're not really producing products, we don't have things to export, but we're relying on all these other countries overseas to create products for us, which means we are more reliant on them than they are on us. And the reason that we're able to pay for all these products overseas is, again, because of our dollar. They believe and trust that our dollar has value. But if that ever gets challenged, now we are in big trouble, because now we're trying to buy all these products because we're reliant on the rest of the world to produce products for us. We're hoping and praying that they will continue to accept the dollar as payments for all the products that we need, but if they don't, now we're in trouble because we're reliant on the rest of the world to produce all of our products, and now we don't have a way to pay them because they don't want the dollar anymore, or because they want more dollars, and now we're not producing enough to create income within the United States to send this money out. So we need products created by the rest of the world more than they need products created by us, and this is only able to sustain as long as people continue to value our dollar. And then we have a surprise, economic slowdown, because the country is not growing fast enough economically. And everybody thought that, hey, our pandemic is over, people have this pent-up demand, they have all this extra cash, they're going to go spend, and our economy is going to start growing and it's going to start booming. But our economy is not growing as fast as we would like, and in fact, we're seeing the economy actually start to cool down. It's slowing down, which means that now we're running into a tough issue, because the government thought that they could just stimulate our way out of this pandemic to get our economy roaring again, but it's not working fast enough because our economy is still slow and it's actually slowing down. Even Amazon's starting to get worried because they're saying that spending is slowing down and they don't know when it's going to pick back up. I want to highlight one paragraph from that Fortune article. Here's what it says. After Amazon gave a not so good outlook about the economy in July, everybody thought that things would be better now. It says, quote, "I think people were hoping that this quarter would be the bottom, and now it doesn't seem like that's the case, because some of the challenges that they laid out in the summertime of 2021 didn't get worse, but they didn't get much better either." So Amazon, like other retailers and companies, came out in the summertime of 2021 and they said that, yeah, things have been booming up until now, but we're kind of worried about the future because we're starting to see things slow down. And then everybody assumed that this would be better by the end of September, or at least by October of 2021. And now Amazon's coming out again in October of 2021 saying, yeah, things are not getting better and we don't know when they're going to get better yet. Our economy runs on spending. If I take $100 and I go to your restaurant and I buy a nice meal, well, now I spent my hard-earned money at your restaurant. You made $100, and now you can take this $100 and reinvest it back into your company. You can use this money along with everybody else's to open a new store. You can hire more employees. You can invest in more options on your menu. And so now if I spend money in your restaurant, you have money to grow, expand, hire more employees, and grow the economy. If I don't spend money, either because I'm worried about the economy or because I don't have any money to spend, now you don't make that money, and if people are not spending at your restaurant, now you don't have the ability to open a new store and hire more employees, and you might even have to let some of your employees go. This is something you have to pay attention to if you're investing your money, especially in the stock market, because if you're investing your money in the stock market, you're investing in the future growth of the economy, and if the economy is not growing fast enough, that's not so good news for the stock market, which is why, again, you need to understand what's going on, that way you can make smarter decisions with your money. But that also means that you need to be aware of what your goal is in the stock market, because if you're investing for the long term, you need to remember what your goal is, that way you don't don't overpay, and that way you don't panic sell, and that way you don't buy based off of greed. You need to know what your goal is, you need to know what your strategy is, and based off of that, you need to know how to analyze the right companies, or you need to know how to invest. Because if you're not interested in trying to analyze and find the right company, then you need to know which ETFs to invest in, because that is a more passive way for you to invest without having to try to pick the best stock. If you enjoyed this short clip from my longer videos, here's another clip that I think you'll love. And while you're at it, if you're interested in learning more about how to start generating passive income, our team put together an amazing guide that goes over what passive income is, how to start generating passive income, and different passive income strategies. These are things that you can start doing even if you don't have a lot of money. So if you want to read this free guide on how to start generating passive income for free, all you got to do is click that button right over there. Thank you for watching, and as always, keep hustling.